Store Capital. Today we're diving deep into a powerful concept that utilizes volume profile to predict the direction of the Nasdaq, S&P 500 and the Dow Jones with an astonishing 83% probability. We're not here to feed you any BS, no, we are about to unveil a concept that could revolutionize the way you approach the markets.
Okay, so first things first, let's look at what is the volume profile. So volume profile is a tool which measures the volume traded at each price level. So you have it on your trading view. I've already started. So let me draw the volume profile onto chart to quickly explain how it works. So this is the volume profile. As you can see, there's a shaded area and there's a light area. The shaded area is called the value area, and this light area is outside the value area. So the value area all depends on your settings, but on default is 70% of the volume, where 70% of the most volume occurred. That is known as the value area. So you have the two lines to border the value area, and anything outside that is not value area. Next thing, you have a red line over here. This is called the point of control, which is the point where the most volume had been transacted, which is why you have such a huge bar over here. That is the point of control. So for this strategy, we're gonna use the volume profile to give us an 80% chance of pulling back into the point of control. So now what we're gonna want to do is highlight the regular trading sessions. So I'm on the Nasdaq here. As you can see, we're currently in the electronic trading hours. If I switch that, we'll go into the regular trading hours, which is from 9:30 up until 6 o'clock, 6:15 if I'm correct. How this works is that when we draw the volume profile, we're gonna draw it from the open to the close, regular trading hours, so from the 9:30 to the 4:15 p.m. close. And if we open inside the value area, we now know we have about an 85% chance that price drops and hits the point of control. And this has been tested over 10 years of data. So let's go over a few days and look at what happens when we have those scenarios. So in this situation, we opened outside, so this wouldn't have counted. Okay, let's look at this Wednesday. Okay, so Wednesday, perfect example. So we opened inside the value area. What did price do? Price pushed away and started rejecting the value area low. So we know as soon as we open, we know that this red line is, we have about an 85% chance that it gets hit. So as soon as we pushed away, we would have been looking for long entries in this leg. So here, what we would have used as our long entry would have been a market structure shift, a pullback to a fair value gap on the 1 minute, and we're going to trade it up, and our take profit was going to be the point of control. So on this day, we did have a move to the point of control from the value area. Okay, let's continue going. Okay, we opened outside. We opened inside, and we went and we pushed and we tapped the value area. I mean the point of control. This is on the 15 minute. On the 1 minute, that's where you look for your entry signals for the strategy. Let's go to the next day. Okay, we opened outside. This day we definitely opened outside. Let's look at this day here. Perfect example. Another one. We open in the value area, and what did price do? Price immediately pushed up and chased the point of control. So as you can see, this point of control acts as a magnet. Let's look at a few more examples. Okay, we opened outside. Okay, this one is even beautiful. So here we opened inside. We didn't actually get the confirmation on this day. So this day didn't have played out. But if we look here, what we have is we have a push away from the volume, from the value area and outside. So at this entire leg, we're looking for longs because we know we have to reach this point of control. So in any moment here, when we have a shift in market structure on the lower time frames and we respect certain PDRAs, we look to go long. So we look for a market structure shift and a target long. This case, we don't have hit our profit target. But for example, let's say we had a shift here and we took an entry somewhere here and had our stop loss somewhere, something like this. We would have still secured a good 2R at least, you see. So that's the power of this volume profile strategy. Here's another example on ES. So if you look here, if we draw our volume profile out, and this is how I use it. This is my textbook setup. So if you look here, when we draw the volume profile on the previous day's range, 9:30 up till 4:15, you can see that then following day we opened inside the value area. What did price immediately do? Price didn't even create a top wick. Price pushed away from it and we pushed below the value area low. So in this moment, we know that we still have our statistic that states that this red line here is gonna get hit 85% of the time. So we know that there's still a high probability that we go up and hit here. So I myself, with my Judah swing, I know that this here, this move away from the point of control is probably a Judah swing. So we're looking for our reversals. Me being an ICT based trader, what I did on this particular day is I waited for a market structure shift, as I said. The market structure shift. We had a bit of SMT here. I remember we had a bit of SMT. So that can be an extra confluence on when to play the reversal. I think it was with Dow Jones. Then we have a fair value gap here. So we had a market structure shift, we had a fair value gap, and lastly we had a breaker block. So this is the way I trade this. And when you trade this with multiple confluences, it can be extremely powerful. So as soon as that happened, I took my entry at the pullback to the fair value gap. I had my stop loss 2 candles below the fair value gap, just like I showed in my previous videos, and I had my take profit as the volume point of control. So that gave me a 3.5 hour move. And if you're not being aggressive, you don't even need to aim for that. As you can see, price eventually did hit it. But then you can even just say, okay, I know I'm guaranteed at least a bit of a pullback. Let me target a 1 to 3. Or let me target a 1 to 2. Whatever you're satisfied with. As long as you know if you haven't yet touched the red line, there's always a possibility for a pullback. Hope you liked the video and you enjoyed it. If you did, please hit the like button and subscribe. It's an insanely powerful statistic when known how to use it right. You have an almost 85% chance of a pullback. So this can be used in confluence with whatever strategy you use, whether you use oscillators, RSI, MACDs, whether you use moving averages, whether you trade harmonic patterns, ICT, support and resistance, whatever it is. This isn't particular to any strategy, it's just a powerful statistics. So that's it. Thanks for watching. See you next time.